Welcome to this week's free update from Time Price Analysis. And this week I thought we'd take a look at the main US index, the S&P 500. So this is being recorded on Saturday, the 31st of March. Now, starting with our long-term weekly chart of the S&P 500 and the lows that we saw all the way back in March 2009, we've labeled it as a cycle degree wave 4 low. What we then look for is the first 5 wave structure up off that low. So we can see here we have a 1, 2, 3, 4, 5 up into the highs seen in April of 2010. So we've labeled that as the primary degree wave 1. That's the large green circled numbering on this chart. An ABC back for the cycle primary degree wave 2 low into the summer of 2010. What we then do is take the length of this wave 1 and use our Fibonacci projection tool using logarithmic scale Fibonacci projections and project up off the bottom of the 2. So we're now looking for the top of the primary degree wave 3, which I don't believe we've yet seen. So if I come down 1 degree, I think of that 3, which in itself needs to divide into 5 waves at intermediate degree, we have waves 1, 2, 3 into the May 2015 high, and ABC back for the 4 into the February 2016 low. So there's the 4 at intermediate degree. From there, we need the intermediate 5 to itself subdivide into a further 5 waves at minor degree. And thus far, I think we've seen waves 1, 2, and 3, and we are currently in the final throes of the minor degree wave 4, with a little lower still to come before we then resume the uptrend to around the 3200 S&P 500 level. So if I now come down and look at this on a daily chart, and I'm going to work the count on the daily chart up off this intermediate degree wave 4 low back in February 2016. So here is that daily chart. And if we go back here, here's that wave 4 low at intermediate degree. And again, 1, 2, 3, 4, 5. Those are the 5 waves that constitute the wave 1 minor degree up into the June 2016 high. Clear ABC back for the 2. Same methodology, we take the length of this 1 and project up using the Fibonacci projection tool set to logarithmic scale from the bottom of the wave 2. Now, what we then look for is the wave 1 of 1 lesser degree to come up and hit the 618 extension, which you can see is exactly what it did, and it did so in a 5-wave structure. ABC back for the 2, 1, 2, 3, 4, 5. So this is for this 3 at minute degree of this 3. And that came up and hit the 138.2 extension here. That was the peak we saw in early August last year. Then a very small ABC back for the wave 4, which hit and held the 123.6 bottom up Fibonacci extensions, and then an extended wave 5 that came just shy of the 238.2. It just tagged over this 223.6 extension here, which seems to be the current favorite for wave 3s in the S&P 500, and indeed its cousin, the ES. So that was the peak that we saw in late January of this year, followed by a sharp sell-off. Now, that sell-off, I believe, is the A wave of an A, B, C corrective structure for this minor degree wave 4 low that we're looking for. And at the moment, if I take the length of that A wave and then use the Fibonacci projection tool to measure down off the bottom top of the B, I'm looking for this C wave to be equal in length to the A wave ideally. And that would be at S&P 500 2471. If I also look at these retracement fibs, so that's the length of this wave 3 as measured off the low of its related wave 2. The 38.2 retrace, which is what we would normally look for, is at 2497 SPX. If I then reference the bottom up Fibonacci extensions, the 138.2, 2478.71, and if I then look for the wave 4 of 1 lesser degree, that's down here at S&P 2422. So not a hard and fast rule, but an Elliott wave guideline is we look for this 4 to be in the region of the wave 4 of 1 lesser degree. So what we're looking for is some continued downside over the coming weeks to hit this region here that was marked by our target box. It's a possibility we could come right down to the bottom of this, but the likelihood is that this wave 4 will terminate between 2422 and 2497 SPX, with the ideal target being at 2471. So if I now come down, excuse me, and look at this on a 4-hour time frame, there's the A wave, there's the B wave, here's that C wave that we're looking for. And the final C wave appears to be subdividing into a 5-wave structure that's overlapping, where each of the subwaves is in 3s, so a diagonal structure. And if that's the case, I think this week just gone, we saw the bottom of the wave 3, and we're now seeing an A, B, C structure up for this wave 4 before we drop down. So what I'm looking for early this week is a little bit more continued upside in the S&P 500, then a final drop into our target region. And finally, just breaking that down one more degree in terms of time to our hourly chart, and off the top of the B wave, 1, 2, 3, here's that ABC. The ideal target for any more upside this week, 2680 to 2702 S&P 500. I wouldn't expect us to trade over this 2702, 2703 level here, which is the 764 retrace of this wave 3 as measured off the top of this wave 2 here. So we're looking for this little push up early next week and then a drop down to our target, at which point we'll be looking for swing long positions for our subscribers at Time Price Analysis in our trading room. I hope that's been helpful to people. And if you want more analysis of this type and more in-depth analysis, as well as live trades called in our live trading room, then come and try a 2-week free trial with us.